the hottest markets on the board have been crude oil and tech stocks. Many are wondering, can they stay hot? Few people associate the price of crude oil with that of tech stocks, but the reality is the two asset classes have been positively correlated in recent months. In fact, they've been stunningly correlated. If you look at these two markets over the last 180 trading days, they've settled in the same direction about 84% of the time. If you narrow that down to the last 90 trading days, they've been settling in the same direction 94% of the time. In other words, they're behaving almost identically in the marketplace. Both markets suffered unreasonable losses in late 2018 and have since benefited from FOMO trading, or fear of missing out dollars, by those investors and traders who liquidated at inopportune times and are now scrambling to get back in. For clarification, we're going to look at the Nasdaq 100 futures contract. This particular futures contract represents 100 of the leading non-financial large cap companies listed on the Nasdaq Stock Exchange. It's slightly different from the Nasdaq Composite Index, which is a widely quoted stock index representing some lesser known Nasdaq listed stocks in addition to those included in the Nasdaq 100. There's widespread concern over the pace of the Nasdaq in 2019, but we argue that much of that rally was simply correcting a wrong. Stocks probably shouldn't have fallen to the depths seen in December of 2018, and most of the snapback rally was simply erasing irrational panic-induced selling. That said, now that the index is in the vicinity of an all-time high, we admit the sustainability of a rally has to come into question. However, with that said, we do believe the odds are in favor of a last hurrah rally into new highs before any significant selling shows up. If you look at a weekly chart of the Nasdaq, you see that, first of all, we did see quite a bit of extreme volatility in the late 90s, early 2000s as the Nasdaq was topping out. And we're seeing something similar today. We're getting really big rallies followed by really big sell-offs. So we do think that that's indicative of some sort of trouble ahead. Nevertheless, if you look at a weekly chart, we see some resistance at 78.35. We believe that that resistance will eventually be broken. There are simply too many traders, like we mentioned, with fear of missing out, that are probably piling the money on. We know that a lot of investors are underinvested. A lot of speculators were actually short a lot of the recent rally. And so as they flip their positions and exit their bearish positions and so on and so forth, the market could propel higher. In fact, we wouldn't be shocked to see 84.55 on the Nasdaq Composite. That's roughly 10+% from where we are now. I know that seems like a pipe dream, but it could easily happen. When markets become speculative and emotional, crazy things happen. Crude oil futures, on the other hand, they have been on a tear alongside Nasdaq. However, going forward, we're not convinced these two markets are going to continue to move in lockstep. A weekly chart of crude oil suggests that there should be some resistance around the 64 area. This resistance was previous support to a trading channel that dates back a couple of years. In fact, it dates back to the 2016 lows in crude oil. Our best guess is we do get some back and filling from these levels, especially with OPEC news in regards to supplies. We think any pullback could be as deep as 55. With that in mind, 55 would probably be a nice floor and a place for the bulls to get interested. Aside from a temporary pullback from 64, possibly as low as the mid-50s, ultimately we believe crude will move higher. We're looking for crude to see the high 70s to the mid-80s by the end of the year. So in summary, both the Nasdaq 100 and crude oil futures are facing immediate overhead resistance. However, despite some potential back and fill trade in the near term, both markets will likely continue higher as we work our way through positive seasonality. Further, these markets should get a boost from FOMO traders, fear of missing out traders, that are willing to chase prices higher in hopes of gaining market exposure that maybe was unnecessarily liquidated late last year. Never underestimate emotions that repetitively cause market prices to become irrationally exuberant in the short run, despite valid questions regarding the long-term sustainability.